Good afternoon. It is Thursday, April 14th, 2011. Well, if you've been keeping track of the precious metals in the last couple weeks, they are going up substantially. Gold has hit an all-time record high of 14.72 an ounce. Silver is at a high of $42 an ounce. It's not an all-time high because in 1980, when we saw a sudden spike in inflation, silver for a brief, very, very brief period hit $50 an ounce and then went back down. And I'll explain that in a minute. Gold has never hit this nominal high, so all-time highs for the precious metals. Can't believe silver is. I mean, I knew this was going to happen. I was telling everybody this was going to happen, but it's still it's surreal to go on cnnmoney.com, which is a website generally check to catch up with stock prices and things, and to actually see silver at over $40 an ounce. It's a bit surreal. So right now, though, you're not hearing a lot about this in the corporate media. You have to dig a little deep to read about it. But right now in New Hampshire, they're having different countries around the globe, including some representatives in the United States, including George Soros, Glenn Beck's favorite character. Right now, there's a meeting called Bretton Woods 2 going on in New Hampshire, and you're like, what does that matter? This is a meeting, a convention type a deal. I'm not sure how you would classify it, dealing with monetary issues. And George Soros, the multi-billionaire, big-time statist, he's come out and said up front that the dollar is no longer the reserve currency. The dollar's days as a reserve currency are coming to an end. According to Soros, it's already ended. And so I'm not entirely sure what we're going to see coming out of this, but it's important to go over the history of, all right, what was Bretton Woods 1, and what is the history of the United States' privilege as the world's reserve currency. Bretton Woods 1 was in 1944, right at the close of World War II. It was clear that the United States was coming out on top. The British Empire was coming to an end. Germany, of course, was ruined. France was not in good shape. It was the U.S. and the Soviet Union. And so the Bretton Woods Agreement in 1944 established the United States dollar as the world's reserve currency. Now, what does that mean? That means all the currencies around the world, including the franc, which doesn't exist today, but back then it did, all sorts of currencies from different countries would back their currencies with dollars. The dollar was the world reserve currency. Now, from 1944 to 1971, the dollar still had a very, very tiny link to gold. Individual Americans could not redeem their Federal Reserve notes for gold anymore like they could in the past century. But central banks from around the world, such as the Bank of France, could redeem their holdings of Federal Reserve notes for gold. So that was the agreement. And the threat of foreign central banks redeeming Federal Reserve notes for gold theoretically was supposed to check the Federal Reserve from overissuing notes. So that was the agreement in 1944. Bretton Woods. Remember, the meeting I talked about at the beginning of this video was Bretton Woods 2. So you had the Bretton Woods Agreement. In the 1960s, under the Lyndon Johnson administration, the federal government drastically increased spending. Not only did we have the war on poverty, which increased domestic spending substantially, but on top of that, we had the Vietnam War, which was extremely costly and unnecessary, but I'm not going to go into that. It's funny, Barry Goldwater was portrayed as a war hawk in 1964. By the late 1960s, Barry Goldwater was already saying, look, I wouldn't be in Vietnam if I was president. But, side issue. So the United States was spending a ton of money in the 1960s. Was expanding the Federal Reserve was expanding the monetary supply, and I'm not sure what year it was, if it was the early 70s or the late 60s, but foreign central banks began pressing the Federal Reserve for redemption of Federal Reserve notes for gold. The Bank of France was demanding, I think they were the main one, I'm not sure who else was involved. And foreign central banks were coming to the Fed and saying, look, you're printing too much money, there's too much spending, we're going to redeem the notes for gold. And in 1971, under Richard Nixon, a so-called conservative, which he wasn't whatsoever, in 1971, the United States finally went off the gold standard completely. And from 1971 to present day, we've had a total fiat currency. What fiat means is that the currency has no value except that which the government gives it. Okay, it's not redeemable in any commodity. It doesn't have to be gold, silver. Any commodity it's not redeemable in. It's just pure paper money, not backed by anything. And then, surprise, surprise, by the late 70s, we were experiencing a major inflation problem in the United States. Now, I didn't live through that, but some of the viewers of this video might remember the inflation of the 1970s. Gold, I think it was in 1979 or 1980, might have been 1980. Gold shot up to $800 an ounce. Remember, in 1971, gold was set at $35 an ounce. And it had been $35 an ounce since 1933 when FDR confiscated gold and changed the price from about $20 to $35. But that's getting off subject. But gold was $35 an ounce in 1971. We go off the gold standard and inflation kicks in. Gold shoots up to $800 an ounce. Silver shot up to about $50 an ounce. And then Ronald Reagan comes to office. Reagan was more of a hard money guy compared to Jimmy Carter. Jimmy Carter was an inflationist. He believed in that entire philosophy, much like Barack Obama today and George Bush before Obama. Both Bush and Obama are inflationists. Ronald Reagan comes in and nominates Paul Volcker to be the Federal Reserve Chairman. Now, Paul Volcker, in contrast to the 1970s Federal Reserve Chairman, was an inflation hawk. He didn't like inflation. He said we need to contract the currency, and he hiked interest rates up to, I believe it was over 20%. Remember, the interest rate today is under 1%. It's near zero. Paul Volcker hiked it up to over 20%. That did cause a major recession in the early 80s for a brief period. But what it did was it saved the currency. And that's when gold plummeted after the Fed contracted, and so did silver. But that was because the Fed put on the brakes. The Fed stopped serving alcohol to the American public. Now, how is that different from today? Today we have inflation doves, pro-inflationists in charge of the Fed, Ben Bernanke, and both Greenspan and Ben Bernanke were big-time inflationists. Just print money, print. And the Fed is denying that there's any inflation going on, even though there is. In fact, I got a CNBC article here. Inflation today is actually near 10% using the old CPI measure. They changed the way the CPI, which is the inflation measure, they changed that after 1980. But if you use the previous way to measure inflation, inflation right now is at about 10%. It's getting really high. I mean, you probably noticed that at the grocery store. But today's CPI doesn't count the cost of food, and it doesn't count the cost of energy, two of the biggest, most necessary things that Americans need to get by. So inflation is undoubtedly here, but Ben Bernanke is showing no interest in putting on the brakes. We don't have a Paul Volcker in charge of the Fed, and we don't have a Ronald Reagan at the White House. Now, both of them have big problems, of course. I don't believe in a Federal Reserve. I'd rather have a Paul Volcker in charge of the Federal Reserve than a Ben Bernanke. He's the lesser of two evils. And the problems I had with Reagan, and I think Reagan was very influenced by George Bush Sr., and that was part of the problem. Another topic completely. But again, lesser two evils. I'd much rather have a Reagan in the White House than an Obama. But right now we have Jimmy Carter II on steroids, Barack Obama in the White House, and we have, of course, Bernanke. I don't see interest rates going up. I think inflation is going to continue. QE2 is going to continue. QE3 is a possibility. And as long as the Fed is printing money, gold and silver are going to continue going up. And I don't think we've even begun to see the end of this rise in gold and silver. Historically, if you look at historic monetary systems, every time the currency is expanded like it is right now, every single time inflation comes, every single time gold and silver become more precious, more valuable. And actually, you know, I'm saying gold and silver are rising in value. They're not. It's the dollar that's declining in value. Gold and silver is the same. But, you know, every single situation, the greenbacks during the Civil War that Abraham Lincoln issued, immediately depreciated. Gold and silver became more dear. Just the 1970s, as I just mentioned, the British in 1797 went off the gold standard, and immediately and within the next 10 years, their notes declined by 25%, and gold and silver went up in price just every single time. So we have 10% inflation right now if you use the old CPI measure. The Walmart CEO recently came out and said that he expects, quote, serious inflation in the next few months. And so I'm urging every one of you, even if you've already bought gold and silver, you need to take any extra money you have and you need to buy more, because it's going to continue going up. I'm more of a fan of silver right now. I think silver's got a lot farther to go. Gold's going to go up too, though. I think as a percentage, silver's going to go up more, so I've been sticking to silver. But you really have to. If you want to protect your wealth, you have to. And I would stay away from paper silver, these ETFs, because these banks like JP Morgan, they'll issue paper silver, but they don't have enough silver to back up that paper. And as the price of silver goes up and up and up, I think they're going to run into big problems with that. I would buy physical gold and silver. It's not weird to do that. For some reason, Americans have come to believe that owning physical gold and silver is somehow weird and odd and unusual. But why is it? If you look, let's compare the Dow Jones Industrial Average to the precious metals and compare their performance. The Dow Jones in April of 2001, 10 years ago, was between 10 and 11,000 points. 10 and 11. Today it's 12,000. So if you invested in a stock market 10 years ago and kept your money in there, you would only, on average, you would see just minuscule gains. 1 year ago the Dow was 11,000. Today it's 12,000. And the reason why the Dow is up right now is because of the printing of money, to be honest with you. A lot of that new money is going into stocks. So it's creating a bubble. That's what expanding the monetary supply does. It creates asset bubbles, whether it's housing, stock market, so forth. Now, so we see those small gains in the Dow Jones. Let's look at gold and silver. April of 2001, gold was $250 an ounce. Silver was $4 an ounce. $4 an ounce. Yeah, if you bought it back then, you would have been considered unusual, strange to invest in it. You're supposed to invest in the stock market. 2010, a year ago, April 2010, gold was $11.40 an ounce and silver was $18 an ounce. I was here over a year ago begging you, every one of you, to buy gold and silver. I'm sure a lot of you have. But look at the gain since April 2010. Silver has gone from $18 an ounce to $42 an ounce. You would have more than doubled your assets there, or your money. Gold, 1140 to 1472, and that's going to continue. And it's not too late to buy. You don't want to see my April 2012 blog where I'm saying, well, look, in 2011 silver was $42 an ounce. Today it's $100 an ounce. If you invested in silver a year ago, you would have doubled. You know, don't wait. Like, it's still available. You don't need to order it from Goldline or some of these companies who will rip you off and charge 30% overhead. Go to your local coin shop. Go on Google and type in coin shops. And you'll find local places, and you can buy 1 ounce silver rounds. You can buy a bunch of them, buy like 30 of them. You know, invest some money. If you have, in my view, anything that is written on a piece of paper is risky right now. You want to own real things. And it doesn't have to be gold, silver. Some people might want to own other real things like land. I think land could be good, or food. Anything, though, that has real intrinsic value is safe in a time of inflation. You can't trust paper during a time of inflation. The world right now is flooded with paper money. It's not just coming from the United States. It's coming from the European Union, the European Central Bank. It's coming from all over. Now, as far as the stock market is concerned, I think the stock market will go up quite a bit. Stock markets always go up in times of inflation, just like everything else. So there could be some really big gains in the stock market. You could see the Dow Jones going to 20,000. Now remember, those are nominal gains, though, and you know, obviously I'm not here to give stock market advice. If you want to own stocks, I like mining stocks. There's a lot of great silver mining stocks, and they've performed very well this year and the year before. So anyway, please protect your wealth, because I mean, if you're watching my video, you know, I appreciate you watching it, and so I care about your own financial situation. I want everybody here to be in a sound, safe position in case inflation starts kicking in more than it already has. So anyway, that's my advice, and I've been saying it for a long time. I hope, you know, everybody's following it. It's, you know, this is very serious, and we're not used to having to do this because the United States hasn't been in this kind of situation in a long time. That's called the normalcy bias. Everybody has that problem. I have it. It's part of the human condition. The normalcy bias, it's basically like, look, the normalcy bias, the definition is in a word. We're all biased towards the norm. If an idea comes around, or if something happens that is outside of what we're used to, we're in denial of it. We don't want to believe it. We tend to be biased towards what we know. And, you know, I was born in 1984. I haven't known this before, and most of the viewers here have not known this unless you lived through the 70s and you remember that inflation. But most of the viewers right now probably don't know of inflation, and so the normalcy bias tells us, like, oh, you know, like, it's not that big of a deal. But it is a big deal. And if the United States dollar is no longer the world's reserve currency, that is a very big deal. And remember, that's our biggest export, is the US dollar. We take in Chinese manufactured goods, which are real things. Almost everything we consume is from other countries. And we export paper money, paper dollars that aren't backed by anything. Gold, silver, a basket of commodities, whatever. The only reason why we're able to do that is because the dollar is the world's reserve currency. If the dollar is no longer world's reserve currency, we can't export dollars anymore because nobody will want them. So that is a huge, huge deal, and it's not something to take lightly. And if the dollar is no longer world's reserve currency, if we continue to inflate, that's going to bring some major problems to the United States, and it's going to change the way we live. And we just have to accept that. We have to deal with that and live with that, because we live in reality. We don't live in a fantasy world. Everything that's going on around us right now is real. And so we need to take it seriously. And, you know, hope for the best, pray for the best, prepare for the worst. And, you know, if things turn out better than what a lot of economists, what a lot of free market economists right now are saying, then great. You know, but it's always good to be prepared. That's all I had to say. Thanks for paying attention, and I'll see you next time. Bye.